Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. Well, it has been a freaky Friday to say the least, given the fact that we saw deep gashes on the screens today. The Nifty, in fact, slumping by as much as 300 points, and the Sensex also almost 1,000-point cut coming in on the Sensex. Even the mid and small cap indices were moving in tandem with the benchmarks. Of course, it's the jitters over the US jobs data that has got the markets worried. Of course, if there is a cool off in the US payroll data, that could mean that the US economy is headed for some bit of a slowdown, and those concerns have been weighing in on the global markets. And today we saw it play out on in our markets as well. All the sectors were trading with deep gashes. PSU banks, they were hammered out of shape today. A 3% cut coming in on that index. You have shares like SBI plunging as much as 5% or thereabouts, and energy as a basket was also a top laggard. But all the sectors, banks, autos, realty, all of them saw some bit of hammering today. In fact, in terms of individual movers, SBI, BPCL, ICICI Bank, HCL Tech, Tata Motors, NTPC, these are some of the stocks that saw cuts of anywhere between 5% to 2%, 2 to 5% kind of cuts coming in on all these stocks. Aside of that, you had few gainers today. The gainers were in fact few and far between. Asian Paints topping the list, Bajaj Finance as well holding out, JSW Steel, Divi's Lab, LTIM Mindtree, Hero Motocorp and HUL. These were the only gainers when it comes to the benchmark index, the Nifty 50 index. But in terms of the movers and shakers in the broader end of the markets, Vodafone Idea, on the back of a Goldman Sachs downgrade and a significant cut in price target, that stock was down somewhere around 12% or thereabouts. Aside of that, you had Minda Corp, Easy Trip, Chennai Petro. These are some of the stocks that saw some bit of hammering. On the other hand, you had Godfrey Phillips. That stock was in focus, up somewhere around 11% or thereabouts, given the fact that the company will be considering a 1:2 bonus issue this month. That stock, reacting to this bit of news. Gujarat Fluoro was the other one that was extending gains from yesterday. Glenmark Life and SBI Card as well. Goldman Sachs report, upgraded SBI Card sees valuation comfort. So reacting to that, the stock was up by somewhere around 4 to 5% or thereabouts. Aside of that, let's take a look at some of the stocks that are on my radar this afternoon. SBI is one of them. That was the top Nifty laggard today, a 4.5% kind of cut coming in on an SBI. Goldman Sachs has downgraded the stock. In fact, it has downgraded the stock to sell from neutral. The target price has been cut to 742 rupees from 841 rupees. Remember, you also had Morgan Stanley coming out with a pretty cautious note on banks just a few days ago, and they had also cut the target price on SBI to below 800 rupees. Of course, Morgan Stanley had highlighted that it's time to stick to large cap private banks now and perhaps rotate out of PSU banks. So Goldman Sachs as well sees multiple headwinds, at least when it comes to SBI. Return on assets is near its peak when it comes to SBI. That's what Goldman Sachs has pointed out. It has also said that the risk-reward profile is turning unfavorable as the sustainability of the return on asset continues to see growing headwinds. Valuations are also likely to see some bit of derating. Lower loan growth, given the widening gap with deposit growth is something that Goldman Sachs is envisaging for SBI. Credit costs, in fact, may also increase, given the fact that there are rising slippages when it comes to MSMEs and agri and unsecured portfolios. So that could lead to a rise in credit cost for SBI, which is why Goldman Sachs has cut the FY25 to FY27 earnings per share for SBI by as much as 3 to 9%. In fact, the target multiple has also been cut to 1 times from 1.2 times previously. In fact, if you look at the brokerage verdict on SBI, 5 out of all the brokerages, or out of the 49 brokerages or analysts that have coverage on SBI, 38 of them still have a buy rating on the stock. I think 5 of them have a sell rating. If you look at the stock performance, even though on a YTD basis, SBI has done well to give returns of somewhere around 20% or thereabouts, but over the last 6 months and 3 months, the stock has actually done nothing. It has been sideways, given negative returns, marginally negative returns, but although it has kind of fizzled out, if you look at the YTD gains. On the other hand, you had SBI cards, that stock was up somewhere around 4 to 5% because as Goldman Sachs has upgraded the stock to buy from its previous rating of sell. The target price also has been raised to 913 rupees per share. Now, the valuation correction, is something that Goldman Sachs has taken note of. It has said that the valuation has corrected from 36 times FY22 earnings to 24 times forward earnings, which is why they are looking attractive at current levels. And they have raised the earnings per share estimate by 7% for FY25 and 21% for FY26. Now, Goldman Sachs expects the cost to income ratio to improve for SBI card by 430 basis points over FY24 to FY26. And they are also anticipating a loan growth recovery from FY26 onwards. Credit costs are also expected to decline from the second quarter of FY25. Now, these factors, according to Goldman Sachs, support a turnaround in SBI Card's performance, and in fact, it will further improve the return on assets and pre-provision operating profits. So, SBI Card there, divergent views from Goldman Sachs on SBI as well as SBI Cards, and of course, you saw the stock reaction also in a similar fashion. For a downgrade, SBI was the top Nifty loser, almost a 5% cut, and on the other hand, you had SBI cards clocking in good gains on the back of this upgrade. Now, let's shift focus to Vodafone Idea. I think this was the top Nifty 500 loser today, sliding as much as 11%, given the fact that it has a sell call, Goldman Sachs, and the target price has been cut to 2.5 rupees. Just 2.5 rupees. So, that's an 80% downgrade of target price from current levels. Goldman Sachs has noted that recent capital raise is unlikely to be adequate to stop the market share loss or erosion that the company has really seen. In fact, it says that, it actually forecasts another 300 basis points market share loss for the company over the next 3 to 4 years. In fact, just talking about the target price, 2.5 rupees, that's the kind of target price Goldman Sachs has. But mind you, that's not the lowest target price for Vodafone Idea. Deutsche Bank, on the other hand, has a price target of 1.5 rupees on the counter. So, the feeling or the view on the stock is pretty downbeat, even though the company has successfully raised funds recently. But that, of course, according to brokerages, will not be enough to stop or to stem the market share loss or erosion that the company has witnessed. Another 300 basis point kind of decline could be expected in the next 3 to 4 years, which I just mentioned. The company also has significant AGR, adjusted gross revenue, and spectrum related payments, which are expected to begin in FY26, right? Now, there has been no reprieve when it comes to AGR dues, but one section of the street was expecting some bit of relief coming in on the AGR front. The case was being heard in the Supreme Court, but that hasn't happened. And, Goldman Sachs has also pointed out that the street is pretty much premature to assume that there would be some bit of relief, and that could add to capex as well as free cash flow for Vodafone Idea. Now, to achieve sustainable free cash flow neutrality, ARPUs, the average revenue per user for Vodafone, would need to increase by another 200 to 270 rupees. Compared to December 2024 levels, and that could be a tall task, right, for Vodafone. So that is something that looks a little lofty when it comes to what Goldman Sachs has to say. Goldman Sachs is also anticipating that free cash flow will remain negative for Vodafone Idea until at least FY31. Now, Goldman also has a view on Bharti Airtel. It has a buy call, target price of 1700 rupees per share. In fact, it's pretty upbeat on Bharti Airtel, compared to other telecom stocks. It says that the strong growth with inflecting free cash flow and returns profile warrants premium valuation when it comes to Airtel. It sees growth tailwinds to sustain, driven by continued market share gains, and it expects another 200 basis point kind of market share gain for Bharti Airtel over the next 3 years. The growth tailwinds are expected to sustain, driven by organic growth levers and future tariff hikes. Remember, the telecom players recently took a tariff hike, and that was the first in 3 years. And going forward, brokerages expect another one coming in the next fiscal. Goldman Sachs forecasts India revenues of Bharti Airtel to grow at a 16% compounded annual growth rate over FY24 to FY27, 14% at consolidated level, and EBITDA has been forecast growing at a 21% CAGR from over, in fact, FY24. to FY27. Now, another stock that will be in focus since Goldman Sachs has a view on Vodafone Idea is Indus Towers. Now, Indus Towers also owns a portion of Vodafone Idea, and Vodafone Idea has a tenancy on Indus Towers, right? So, Indus Towers will also be affected by this downbeat view on Vodafone Idea. In fact, Goldman Sachs has said that the re-rating that Indus Towers has seen till now may be overdone. In fact, it has downgraded the stock to sell, and the target price has been raised to 350 rupees from 220 rupees per share. Now, the revised target price is still implying a potential downside of 21% from yesterday's close price. Now, Goldman Sachs says that they believe that there has been an improvement in fundamentals. They've also raised the EBITDA estimate by up to 17%. They also feel that the company merits for higher multiples versus recent history. But they still feel that the re-rating has been overdone, and Vodafone Idea's market share erosion and pressure on free cash flow will continue. That could also impact Indus Towers, since of course, as I mentioned, Vodafone has a tenancy of Indus Towers. Now, they see Goldman Sachs sees limited visibility on the medium as well as long-term growth outlook for Indus Towers. In fact, it says that current share price implies sustained 8 to 10% EBITDA growth until FY30, which it sees as unlikely. And as I mentioned earlier, the market is pricing in upsides to free cash flow arising out of any potential reduction in AGR dues, along with a potential upside to Indus Towers' reported merger with Bharti Airtel's data center business. Now, both assumptions, according to Goldman Sachs, are premature. Although Indus Towers, the target price implies a 20% downside, but the stock has done fairly well. I think in the last 6 months, the stock has almost, in fact, more than doubled, so to say. So these are all the stocks, that were on my radar this afternoon. Of course, we are leaving ending the week on a down note. Deep gashes, on the index today, and even the broader end of the markets. Sensex down over 1,000 points. You have mid-cap index also shedding 1.5%. Of course, today's all-important jobs data will be watched out for, and we'll be reacting to it on Monday as well. But some of the technical experts are pointing out that, next week we could see some buy on dips phenomena play out as well. And perhaps Bank Nifty also could see some bit of a rebound next week as the buy on dips and sector rotation continues. But for now, the Bank Nifty was also down 900 points below that 51,000 mark. So crucial support zone broken there as well, almost a 2% cut coming in. So yes, not a pretty picture, not ending the week on a happy note, given the fact that, it is festival season and we have Ganesh Chaturthi tomorrow. But, let's hope that, next week brings some good news and some green on the screen. Most of the movement would, of course, depend on what kind of data comes out of the US tonight. But with that, we are timed out on this edition of Closing Bell. Thanks a lot for tuning in. Have a great weekend. Wish you guys a very happy Ganesh Chaturthi. Come back and join us on Monday morning with opening bell at 9 a.m. I'll see you. Have a great weekend.